Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. Now in this video we are going to be looking at trend reversal indicators. We are going to be looking at some of the best trend reversal indicators that we have in the market. Okay, so whether you are new to trading or have some prior experience, being able to spot trend reversals can make a big difference in how you approach the market. So let's jump right in and look at the best indicators so you can use them to catch good reversals. All right, first up, let's talk about moving averages. Okay, let us talk about moving averages. Now, moving averages are simple but powerful tools for identifying trends and reversals. Now, you've probably seen the terms SMA and EMA thrown around. Now, SMA simply stands for simple moving average, while EMA simply stands for exponential moving average. The EMA in particular is great for trend reversals because it gives more weight to recent prices, making it more responsive to quick changes in the market. All right. So when you see a moving average crossover, for example, I already added the 20 EMA to the chart, so I'm just going to be adding the 50 EMA as well for the sake of the crossover strategy. All right. Now, when you notice the shorter term moving average, which is the 20 EMA in this case, cross below the 50 EMA, which is the longer term moving average, then you have a sell signal. So now, for example, we were in a bullish trend before. So when you are in a trend and then you suddenly notice a bearish crossover or a crossover in the opposite direction, it's possible that a reversal is about to start. Now, mind you, it could be a pullback. Okay, so you have to be careful not to mistake a pullback for a reversal, right? So how do you know whether it's a reversal? When you notice that bearish crossover, using this bullish trend now as an example, when you notice that bearish crossover has happened, make sure that you wait for a retest, because retests are almost always, if not always, happening each time there is a reversal. So when you have a reversal, when you have the bearish crossover, you can see that the price began to make lower highs, showing a bearish trend. So when the bullish trend has when the bullish structure has been broken and you notice the bearish crossover happen, make sure you wait for price to retest the dynamic resistance, which is the moving average in this case, the longer term moving average to be specific, or at least it should retest perhaps one of the moving averages, but preferably the longer term moving average, okay? And then begin to reverse downwards. Then you know that the reversal is confirmed. After that, you can then enter a sell. So perhaps we could have considered entering a sell somewhere around here, and the stop loss will be just above that swing high, above the point of retest, okay? And then as for take profit, we can just wait for when the moving averages cross over in the opposite direction again, which is going to be in the bullish direction in this case, okay? Now, the moving averages are one of the best trend reversal indicators and one of the most used in the market. All right, so the next indicator we are going to be looking at is the relative strength index. Okay, the RSI. The RSI is also a popular indicator in the market. All right, now this is a momentum indicator. All right, the RSI measures the speed and the change of price movements to help you identify when a currency pair might be overbought or oversold. Now, a typical RSI value above 70 suggests overbought conditions, while below 30 indicates oversold. So when the RSI crosses these key levels, it can be a strong indicator that a reversal is about to happen. For instance, if the RSI value drops below 30 and starts climbing, it might be signaling a bullish reversal. Same goes for a bearish reversal if the RSI is above 70 and starts to dip, right? But just like in the case of the moving average, you should be careful not to misinterpret a pullback for a reversal. So when you notice that the bullish structure, you have to combine price action to this indicator, okay? Try as much as possible to implement the use of trend lines so that you will know when the structure has been breached. So initially we were having higher highs and higher lows, showing us a bullish structure, and then suddenly we had a break of structure, right? We have talked about break of structure in the previous video, so I want to check it out, okay? So we had a break of structure, and then suddenly we had the formation of bearish trend, all right? Bearish structure was being formed indicated by lower highs and lower lows. So once you notice that bearish structure beginning to form, then you look at your RSI. If your RSI has entered the overbought and begin to come down, then it can validate that break of structure that you saw, indicating that this reversal is likely valid. And then once the first high, the first low, and has been formed, pay attention to the second high. If the second high happens to be lower than the previous high, you can use a trend line to connect both of them, and then you notice a bearish candlestick pattern begin to form, or you notice that price begins to come down after the second high has been formed, then you can enter your sell, okay, because it shows that a bearish structure is forming. And then the RSI value being below 70, or having entered a overbought territory before and beginning to come down like what happened here, it validates that sell signal. All right, now the third indicator we are going to be looking at is the MACD indicator, the moving average convergence divergence. All right, now this is a momentum indicator and it's great for confirming trend reversal. It shows the relationship between two moving averages of a securities price and is displayed with what we have here. All right, the MACD line and the histograms, So now when the MACD line crosses above the zero line, we have a bullish trend, or a bullish signal rather. And when the MACD line crosses below the zero line, we have a bearish signal. So basically, if we are in a bullish trend and then you notice a break of structure, watch out for the MACD line crossing below the zero line. And that happened around here. Make sure that the break of structure has already happened before you use the MACD to validate that break of structure, okay? So here the break of structure had already happened, and then we looked at the MACD and we saw that the MACD line was crossing below the zero line. So that served as our sell signal, all right, indicating that a bearish reversal is probably starting, okay? Now combining the MACD with another indicator like the RSI can even strengthen your analysis and give you more confidence in a particular or a potential reversal. Now, a quick tip, one indicator alone might not always be enough to confirm a trend reversal. So many experienced traders will use 2 or even 3 indicators to get a stronger signal. For example, if the MACD and RSI are both showing reversal signals, it's a lot more reliable than just one indicator. So you might want to try experimenting with different combinations to find what works best for you, okay? So there you have it. These are some of the best indicators for spotting trend reversals. Moving averages, RSI, and MACD, they can be powerful indicators in your trading toolkit, okay? If you know how to use them properly. Remember, the key is to be patient and wait for confirmation before jumping in, right? If you found this video insightful, please hit that like button and don't forget to subscribe to the channel for more trading tips and insights. It really helps us reach more traders like you who are looking to improve their skills. Thanks for watching, and I'll see you in the next video.